Hi, and welcome back to the Business Career College video series. In this video, we're going to have a quick look at key person insurance. And key person insurance would be acquired normally by a business. So we're going to have a business here, probably an incorporated business, but theoretically it would be possible to see this in an unincorporated business. Or possibly this might include, when we talk about an incorporated business, we might talk about a not-for-profit like a society or a charity. And this business would have a key person. And this happens in all kinds of businesses. So let's look at examples of key persons. Often, if you have a shareholder who's also active in the business, so the person, we might call this person a shareholder manager or an owner operator. That person might be a key person. We might have an employee who has a unique skill set. So somebody who would be very difficult to replace, the kind of person you might use an executive search firm to replace. Maybe a chief financial officer, for example, maybe a particular kind of technician. This would be very dependent on the exact nature of the business. And then you could also be dealing with a salesperson, and this salesperson would have most likely would have a key role in driving revenues. So in all of these cases, we can see that we have somebody who would be vital to the business here. So what's going to happen is hopefully this person has their own personal insurance. So they have their own insurance, which is going to cover them for whatever needs they and their family establish. And then, in addition to that, the business will insure them. And this doesn't have to be anything complicated. So it's very common to use life insurance here. And then sometimes we can see key person disability insurance as well. Not as often. It does happen. With life insurance, obviously this is based on a lump sum. With disability insurance, sometimes this will just be a monthly benefit. Now, we won't get this confused with business overhead expense insurance, which we'll deal with in a separate video. This would be a monthly benefit or a lump sum or some combination of the two. And it does depend on the insurer. This would be driven by the particular contract that you've used. And keep in mind that disability key person policies are not all that common. So then, the business pays the premiums, and the business is the beneficiary, also the insured. And essentially the idea here is we figure out what the cost to the business would be if something happened to our key person, and we put in place that much insurance. And it's pretty common here to use somewhere in the neighborhood of 2 to 5 times salary, although that's not the only basis for determining this. That is a common calculation or common variable to use. The other thing to watch here is that while it can be tempting to do this, in fact, you're only insuring one need with respect to this person. We don't have any insurance in place if this person just leaves, if they move, or if they decide that they have a better job for themselves out there somewhere. This is really designed to cover off these unexpected events, the death or disability of our key person. So keep in mind then that it's not a complete solution. It's just part of a solution, and businesses will do this in order to make sure that at least this one set of risks is taken care of, and usually it's a relatively inexpensive way to do this. If we're insuring anybody other than the shareholder, manager, owner, operator, we're probably using term insurance to do it. Now, this has been used in rare cases, but it has been done where this has been part of a substantiation for an amount of severance. So sometimes we insure somebody for a very large amount here, and then we have an argument later on that says, hey, you've terminated me. I was worth a lot to you, and here's the proof of it. You took out this much insurance on me. And of course, this person would know that there was a key person policy on their life. So we do want to be realistic here in the amount. We shouldn't deliberately over-insure. We should put in place as much insurance that matches the what if scenarios. Basically, what if we lose this person? This can be a fairly easy need if we just go with something fairly basic like 2 times salary, little life insurance policy. In fact, this can be a nice introduction for somebody into the world of business insurance. This is a nice place to start selling business insurance, and you can get more sophisticated, but you do have to be really cautious when you start dealing with owner operators and shareholder managers, because we can get into some fairly complicated tax considerations here. Now, on that note, we'll talk about taxes just briefly here. So the premiums for this policy, the premiums for a key person policy, are not deductible for the business. And any benefit that would be paid, this would be tax-free to the business. So that's key person insurance. It's a fairly simple product, and I hope that does help to understand it. I do hope you enjoy your continued studies. Thank you very much.